In today's economic climate, as the stock market plunges in what many describe as an unprecedented freefall, our investigative report turns its attention to Fox Business, long regarded as the broadcasting home for some of Donald Trump's most fervent supporters. Amid this tumult, the narrative surrounding tariffs and trade policies has taken center stage, with claims and counterclaims about the true impact of these measures on American economic well-being. The controversy began with the recent unveiling of charts detailing how tariffs are being calculated against nations such as China. According to the information presented on Fox Business, the tariff formula is based on dividing a nation's trade surplus with the United States, derived from last year's Census Bureau data, by its total exports of goods. This result is then halved, a method purportedly designed to quantify the economic disadvantage experienced by American industry. However, it is important to note that these numbers are not meant to serve as definitive financial indicators. Rather, they are intended to symbolically express the notion that the United States is being unfairly treated in the realm of international trade. The rapid development of this formula, described by one analyst as a Greek alphabet to Degan's point, suggests that it was assembled in haste, leaving many to question its reliability and overall validity. While the initial coverage on Fox Business paints a grim picture of the market and suggests that these tariff calculations are merely a convenient rhetorical tool, a slightly different narrative emerges from other segments of the media. For example, a commentator by the name of Maria Barto-Romo offered a perspective that, despite the market's staggering losses, highlighted by a 1238-point decline on the Dow and an 800-point drop on the Nasdaq, implied there could still be a silver lining for Trump's policies. This divergence in tone is striking, particularly as the underlying data reveals a broader crisis. With futures indicating a particularly bleak opening, the S&P 500 has fallen by 4%, and the Nasdaq, heavily weighted with technology stocks, has experienced a 5% drop. In this context, the contrasting approaches between Fox Business and the more mainstream Fox News coverage serve to underline the complex interplay of political allegiance and economic reporting. The significance of these market movements cannot be understated. With the Dow down 3%, the S&P 500 plummeting 4%, and technology stocks facing a 5% decline, the ramifications extend well beyond mere stock tickers. For many Americans, these fluctuations represent not just numbers on a screen, but potential threats to the security of their retirement savings and overall financial stability. The market downturn, combined with the overt politicization of economic policy, raises profound questions about the stewardship of the nation's economy. As investors watch their portfolios suffer, the broader implications of these policies become increasingly difficult to ignore. Central to the ongoing debate is the economic philosophy underlying President Trump's tariff strategy. Recent estimates from the Yale Budget Lab suggest that the tariffs could inadvertently push overall inflation higher by 2.3 percentage points this year. This, in turn, would translate to an approximate $3,800 annual increase in expenses for the average American household. During his campaign, Trump passionately claimed that his policies would bring down prices immediately upon taking office, positioning himself as a savior of the American consumer. The emerging reality, however, starkly contrasts with those promises. Instead of alleviating financial burdens, the current policy appears poised to impose additional strain on everyday Americans, highlighting a profound disconnect between campaign rhetoric and the unfolding economic reality. As the market's performance continues to serve as an indicator of national economic health, the fallout from these policies is becoming ever more apparent. Key sectors, such as manufacturing and technology, are suffering severe setbacks. Reports indicate that companies like Whirlpool have announced layoffs affecting 651 workers in Iowa, while Stellantis has reduced its workforce by 900 across several U.S. auto plants. These actions, taken against the backdrop of an already volatile market, suggest that the economic impact of these policies extends far beyond theoretical debates about tariff formulas. The disruption is tangible, with real-world consequences for workers, families, and communities. across the nation. Critics of the administration argue that these economic decisions represent more than mere policy miscalculations. They are emblematic of a broader willingness to tolerate short-term pain in pursuit of political symbolism. In a discourse dominated by stark contrasts, one analyst remarked that the Trump administration's primary method of demonstrating strength on the international stage appears to involve inflicting substantial financial damage on American households. From deteriorating retirement portfolios to escalating healthcare costs and higher grocery bills, the cumulative effect of these policies is creating an environment in which the American public is left to bear the brunt of political posturing. This approach has sparked significant debate about the ethical responsibilities of elected officials, particularly when it comes to safeguarding the economic well-being of their constituents. Beyond the immediate economic repercussions, there is an emerging concern regarding the influence of technology and social media in shaping public discourse on these issues. So, as traditional media outlets become increasingly polarized, many commentators have noted that the current administration may leverage social media platforms to stifle dissent and control the narrative. This dynamic places significant power in the hands of a few tech giants, whose decisions could determine which voices are amplified and which are suppressed. In an era when independent media has never been more vital, the reliance on these platforms raises important questions about transparency, accountability, and the future of public debate in a democratic society. The implications of these developments are profound. On one level, the rapid decline in key market indices serves as a stark reminder that economic policy is not merely a matter of abstract theory, but has real and immediate consequences for millions of Americans. The disruption in the financial markets is more than just a statistic. It is a signal of deeper systemic challenges that could usher in a recession, or in a worst-case scenario, a more severe economic downturn. For those who supported Trump on the promise of immediate relief and economic rejuvenation, the current scenario represents a painful and bitter reversal of expectations. Moreover, the apparent willingness of some within the media to overlook or downplay these economic challenges in favor of partisan narratives is a cause for concern. The divergence in coverage between outlets like Fox Business and Fox News illustrates a broader trend of politicized economic reporting, where facts are sometimes distorted to suit ideological ends. This approach not only undermines public trust, but also obfuscates the reality of the economic challenges facing the nation. As the economy teeters on the brink, it is imperative that media organizations provide clear, factual, and unbiased analysis to inform and empower the public. In summary, the investigation reveals a multifaceted crisis at the intersection of economic policy, media reporting, and political ideology. The administration's tariff strategy, while ostensibly designed to redress trade imbalances, has instead contributed to a significant market downturn and heightened inflationary pressures, factors that are poised to impose substantial costs on American households. The divergence in media portrayals further complicates the public's understanding of these issues, as partisan narratives obscure the stark economic realities that are unfolding. With the current market volatility threatening not only retirement savings, but also the broader stability of the nation's economy, it is clear that urgent attention and accountability are required. In light of these findings, one must ask, what is the true cost of political posturing when it translates into economic hardship for everyday Americans? As we continue to monitor the situation, it becomes evident that the administration's policies are not only failing to deliver on campaign promises, but are actively undermining the financial security of millions. The time has come for a sober reassessment of the economic strategies that have led to this point. A call for accountability that transcends partisan divides and places the well-being of the American people at the forefront of policy considerations. It is a moment of reckoning, one that demands both critical scrutiny and a commitment to restoring the trust that has been eroded by years of political grandstanding and economic mismanagement. This report, therefore, serves as both a detailed examination of the current economic predicament and a call to action for those who believe in the principles of transparency and accountability. In an era when the channels of information are as contested as the policies themselves, independent investigative reporting becomes not just a journalistic duty, but a civic imperative. As the nation grapples with the fallout from decisions that impact everything from retirement funds to basic consumer goods, it is imperative that we remain vigilant, question the narratives presented by partisan outlets, and demand a higher standard of governance, one that prioritizes the collective economic welfare over fleeting political gains.
How